Hello, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, July 20th, 2020, and I'm pre-recording this Trading Places Live for Tuesday, July 21st. Futures currently are mixed, mostly flat, a little bit of upside on the NASDAQ, which is just a little bit of follow-through what we saw on Monday. We'll talk about that in just a couple minutes. The agenda for today, I want to start with that daily market recap, then we'll move into talking technically. Yesterday over at Earnings Beats, I talked a little bit about materials. I don't know if you were able to catch that, but I think it's worth going over again. So I'm going to spend some time talking about materials and why I think it might just be a little early to jump on that bandwagon. Materials have been doing pretty well, but I'm still not sure that this is a long-term thing. This could just be a very short-term relative strength period, and we may turn and roll back over. So I'll talk about that for a bit. I want to go through some chart breakouts. We had the NASDAQ closing at an all-time high. We had the S&P 500 breaking above that June high, finally getting above that 32 level. So nice close there. So this would be a good day to take a look at some of those breakouts. And I'm going to try to concentrate on some breakouts that have occurred after a period of consolidation. So I'm not just looking at stocks that have been going up day after day after day, but rather some, in my opinion, some more meaningful breakouts. Then we'll get into the earnings spotlight and wrap up the show with 3 you must see. So before we get into all of that, let me take you over to earningsbeats.com. If you're not already an Earnings Beats Digest subscriber, I would strongly encourage you to join. All you need, your name and email address in here, hit the subscribe button and you're good to go. No credit card required, completely free newsletter. If you want to unsubscribe at any time, you are more than welcome to. I think it's a great educational newsletter. Give you a lot of insights as to the way we approach the market here at Earnings Beats. If you take a look at the over here on the right-hand side, we've got our model portfolio, aggressive income, and strong accumulation distribution portfolio. These are our 4 portfolios, and you can see these are updated through Monday's close. The model portfolio, since we started it back on November 19th, 2018, up now 123%. The S&P 500 over the same time period up 20.85%. The aggressive portfolio, this one we've only had a little over a year, up 42.29% versus the S&P's 13.72% rise. So some great outperformance here. And I think just subscribing to the free Earnings Beats newsletter will give you an idea of how we look at the market. So we'd love to have you join there. All right, let's take a look at what's going on in the market, or what went on in the market today, Monday. We saw most of the major indices climbing again. It was bifurcated though. The Dow Jones Industrial Average really was just flat, still unable to negotiate that June high of 27.5. The S&P 500 though did close at 32.51, which was more than 0.5% above that June high, which was I think the close was 32.32 and change. So a nice breakout on the S&P. NASDAQ, while we didn't set an all-time high on an intraday basis, we did close at an close at an all-time high. So that was really solid action, bullish action there on the NASDAQ, which we've grown accustomed to over the last several months. NASDAQ up 2.5% on Monday. Mid caps, however, went down. Small caps down. So this was not everything heading up on Monday. This was much more, pick your stock. And hopefully it was on the right side of the trade. The mid caps continue to be in an uptrend. Small caps, same thing. But we got a ways to go to get back to that June high. So you can see the relative strength definitely favors the NASDAQ stock market. Technology leading the way again on Monday. So after a little bit of sideways consolidation, technology had kind of passed the torch on to some other areas of the market while it took a break. Well, it came roaring back on Monday, up $2.73, 2.5%, closed almost above that 110 level. That would have been the first close above 110. Didn't make it though, very close. Discretionary stocks, nice finish today. We did end up 1.6% higher at 135.98. Also easily now past that June high. Discretionary stocks continue to look very good on a relative basis, as do communication services stocks, finishing at 58.10, One of the things I talked about recently was if the market wanted to break out, if the market wanted to get going, it was probably going to need these two groups, discretionary and communication services, to do it. They both closed at new highs. So that was an important development on Monday. And I think that could continue to carry the NASDAQ higher. Energy, not so good. This was the worst performing group on Monday. And as you can see, we came up from underneath, tried to get through the 20-day moving average, couldn't do it, and rolled over. Not a good sign. Utilities also weak, but they're operating in much more bullish fashion above both the 20-day and the 50-day moving average. All right, let's move on to the 10-year Treasury yield and see what happened there. There really was no economic reports out of significance on Monday. The same holds true for Tuesday. Not really looking for anything in terms of economic reports. So the market is going to be looking at earnings and technical conditions. And that, in my opinion, favors those stocks that have been outperforming for a while. Seeing the NASDAQ reclaim that lead on Monday, that leadership role, was pretty big, and we'll see if that continues on Tuesday. I'm expecting that it probably will. 10-year Treasury yield was relatively flat, just down a little bit, finished at 0.62%, but remains in this downtrend. If you want to see the S&P 500 begin to lead the market to the upside, getting help from more economically sensitive areas like the transports and so forth, we really need to see this 10-year Treasury yield moving higher. I think that would help confirm that type of an environment. We're not seeing it yet, but those low interest rates are really playing into the cards of these high growth stocks, companies that can continue to grow their earnings going forward. Those future earnings are being discounted back at historically low rates. That is very bullish, and I think supports higher PEs. All right, let's move on. I want to get into materials. And first, I want to start off with a sector summary. This is, as far as talking technically goes, I really want to focus on the materials here. If you look at the sectors on Monday, you can see technology leading, consumer discretionary, communication services, as I just mentioned. Materials, not so good today, clearly underperforming those three top groups, but not at the bottom of the rung either. If you look at these scooters, and I'm going to sort these in scooter order, materials now are at 82.6. They fell a little bit behind communication services today. Heading into the week, materials actually were just above consumer discretionary and in the second spot in terms of scooter score. And that's what led me to take a little bit more of an in-depth look at materials. Is this something that is likely to continue? Is it something that could be very short-lived? How you approach materials, I think, is somewhat dependent on how you look at the market. If you're just looking at, big picture and you just see materials break out, then I think you've got reason to want to jump in. And I'll show you what I'm talking about. Here's the XLB, which is that materials ETF. Now I'm going to use this little inspector gadget, and you can see that the high on a candle body basis in 2020 was on January 2nd when we opened at 61.08. Now, if you look back these last couple of days, Friday, we opened at 61.08, closed at 61.16. So we did technically have a candle body high on Friday, closing at 61.16. We'd never had an open or close above that level over the past 52 weeks. We came back down today, though. As far as I'm concerned, we kind of have a double top. It looked like it was trying to make a breakout on Friday, but really it's a double top. We're rolling over. The next move up, I think, could be a very significant one. We'll want to keep an eye and see if we get that breakout. I think eventually we're going to get that breakout on an absolute basis. The real question for me is whether or not this is a group I want to commit money to try to beat the S&P 500. Is it going to be a relative outperformer going forward? And in the very near term, we did roll over, so that's going to raise a few short-term questions. But I have other issues besides just Monday's performance. And so I'm not ready to jump on this bandwagon just yet on the materials. So what's holding me back? Well, let me just show you first. If we're going to talk about relative strength, let's pull up a relative strength chart. So I'm going to pull up the XLB relative to the S&P 500. I'm going to put it on a line chart. Takes out a lot of the noise with candlesticks. And I'm going to also put down here the dollar. Oh, I want to make this a little bigger too. Let's get rid of that. And all right, let's try this. All right, now if you're looking at this on a just a 1-year basis, what you see is materials underperforming the S&P 500, and for the most part, the dollar's holding steady, maybe going a little higher, with one exception there in early March. So from left side of the chart to mid-March, we went higher on the dollar, and we went lower in terms of relative strength on materials, and that's what I would expect. That's what we've been doing since 2011. It's been 9 years that materials have underperformed, and it's been 9 years that we've been an uptrend on the dollar. Now, when we look at the last few months, if you want to know why materials all of a sudden gaining strength, you're going to see here materials group going up relative to the S&P and the dollar moving lower. Now, there is every indicator that you use, everything has limitations. And I think I'm a big fan of the scooters, the StockCharts technical rank, developed by John Murphy. Makes a lot of sense to me in terms of how it was calculated, weighting things a little bit more toward the long term. But that long term is also a limitation, because the long term in terms of this scooter score really only looks back about 5 or 6 months. One of the big factors is rate of change. 30% of the scooter score is based on the 125-day rate of change, which is roughly about 6 months. 15% is based on the rate of change over the last 20 days, which is roughly 1 month. That's 45% of the scooter score is based on those two time periods using rate of change, and then simply comparing how materials looks using all of the different formulas for the scooter versus all the other sectors. And when you look at a stock, you're looking at large caps versus other large caps, going through and calculating that formula and then comparing it to other stocks within that same asset class. So one of the limitations on scooter, you sit there and you look at it and say, oh, it's one of the top scooter scores. That doesn't mean it's been a great performer for the last year, 2 years, 5 years. It means it's been a really good performer for the last few months. In this case, for materials, we've been outperforming now for 4 months, and that's why the scooter score is rising. We have not been outperforming for 4 years. In fact, let's take a look. Let's go back. I'm going to go back let's go all the way 20 years. Let's do this on a weekly basis and take a look at this chart. So the dollar bottomed in 2011. I'll annotate this for you so that you can see it hopefully really clearly. But right here, you can see we bottomed, and you can draw your trend lines how you want, but pretty close to that level is what I would be looking at. So I'm thinking somewhere around 94, 95, probably 94 is where the dollar index needs to hold. We're still above that, which tells me we are still in this long-term uptrend. Don't assume this trend line is going to break just because we're moving lower. We were moving lower for 15 months back in 2017 into 2018. We hit this trend line and turned right back up again. So just because we're going lower, don't assume that we're going to break it. Now, why is that important? Well, the entire time we've been in this uptrend on the dollar, we have been in this downtrend on materials versus the S&P 500. I mean, we've had this channel. I could grab this line and drag it down here, and you can see we've been in this channel moving lower and lower. Do we have pockets of strength in materials? Yes. And I'm sure during these pockets of relative strength, we saw the scooter rise, just like we're seeing it right now. But what happened? In time, we've rolled over, and this longer-term big picture trend continued. I'm watching support on the dollar down around 94. Short term, we could move down a little bit lower. We may even see a little bit more relative strength in materials near term. But I think the big test is approaching. We could easily bounce off of this level. If we hit and bounce, I want you to look at what happened when we hit this level and bounced in 2014, right here. The next year and a half was painful. You did not want to be in materials. All right. Here, when we hit this level, look at what happened beginning of 2018. Next 9 months, significant underperformance. You did not want to be in materials. Very difficult to outperform the S&P 500 if you're in stocks within a group that's badly lagging the S&P 500. So let's watch this 94 level on the dollar, and let's not jump too soon to a conclusion that may not be correct. So this is a chart that I think you probably want to keep a real close eye on. XLB versus the S&P on a long-term weekly chart, and then plot the dollar down below, and let's watch this trend line. Okay, let's go ahead and move on. I want to move on to chart breakouts. And got a bunch of these stocks, so I'm going to try to go through them pretty quickly here. But this is a 2-year chart, so I'm going to pull them all up on 2-year charts so you can see the significance of the breakout. We're not just talking about breaking out above a high from 2 months ago or last week. We're talking about, a pretty lengthy period. Many of these are breaking out to 2-year highs, some of them all-time highs. But anyway, STMP, this is stamps.com. It cleared that May high. I see an uptrend followed by a little cup, little handle back to the 20-day, and now we're breaking out. This actually measures up for me about another 50 points to 270. CTXS. All right, this is Citrix Systems. You can see big move up back in March, April, into early May. Topped, kind of struggled a little bit, maybe a little cup there as well, handle, and then breakout. This in the short term would measure up to about 175, so about another 5% or so to go to get to initial measurement, but the overall long-term trend is definitely to the upside here. CTSO, this is a smaller company. Cytosorbents, and I'm going to go ahead and pull this up on a relative basis. All right, you can see back in March, April, May, big move up in price, pulled back, I think kind of went into like a cup handle and then breakout to the upside. I'd like to see a little bit more volume there, but we are breaking out, and this is in the medical equipment group. Healthcare has been strengthening, medical equipment, biotechs, two very, very strong areas. Medical equipment, you can see, just broke out above that January, February double top. And on a relative basis, CTSO has been a strong performer within this group. So the fact that we're breaking out, trending higher, I think this bodes well for the stock. TPIC, this is TPI Composites. This one has been trending higher for a while, just broke above that February high. And actually, let me stretch this out. I lost my 2-year chart. I want to have that longer term look here. So you can see after gapping down, we've really struggled to get through about 26 to 28. This area, we finally did it. We closed at 28.56 and volumes picking up. FBIO. Nice breakout here. Look at all the sideways consolidation coming across. Top in February at about 315. Top in June, couple tops in June around 320 or so. Easy breakout, volume picking up on Monday. So nice breakout there. Zillow. Going back a couple years, you can see hadn't been able to close above 65, right about the 65. A couple of intraday moves above 65. Well, volume ticked up a little higher on Monday. We closed at 66.25. So Zillow looking much better now. ILMN, Illumina, a lot of sideways consolidation. Really struggled around the 380 area. We saw that in July of last year, May of this year, again earlier in July, and then finally the big breakout, volume picking up. Closed up near 400. I think this could be the start of a run there. Lululemon, huge move into early June. And then I think we've simply been, got a little rounded cup here, rounded bottom. And it looks to me like we broke out. Initial measurement here, I think, could take us up to about 360 or so. ISRG, Intuitive Surgical. A lot of sideways consolidation last couple years. Couldn't get through about 620. Last 2 days, look at the volume pickup, busted through 620, now up at 667. I think this could start a nice run in ISRG. VCYT, this is Veracyte. Notice a lot of these healthcare stocks looking good after long-term consolidation. A lot of basing. I like to see basing. VCYT, look at all this sideways action for over a year. Couldn't get through about $31. Closes at $31.91 today. Volume starts ticking up. Nuance, NUAN, this is Nuance Communications. This one had a nice move up, already broke out above the February high, but was sideways consolidating for almost a month. Broke out today on increasing volume. Nice move there. PDCO, this is Patterson Dental. Nice sideways consolidation, couple years. Can't get through the 24.25 area. Just did. Got up to 25.17. Well, we closed 25.17 on Monday. Went a little bit higher than that at the end of last week. Verisk Analytics, VRSK. Really nice looking chart. I like this one. Nice move up here to about 170, pullback, 170, 175. Same thing here. Finally breaking out, getting through 180. MANH, this is Manhattan, a software company. Sideways consolidation, struggling to get through 95. We closed at 96.65. Nice break there. Charter Communications, CHTR, sideways consolidation. February to June, see those highs coming in at 550, finally broke through. Texas Instruments, this was good. This is a good one for the semiconductors. We had made the big run throughout 2019, early 2020, hit this high around 133, and that's where all the selling kicked in. But we have now worked our way all the way back. We had a false breakout back in June, came back down, filled this gap, and now we're coming back up and just making this breakout. I look for higher prices here with Texas Instruments. Last one I have for you is Monster. This is Monster Beverage. Moved up to about $73 early June. Tried it again in early July. I'm seeing equal highs and then a breakout. Look at the volume come in on Friday's breakout. I think Monster looks good. All right, let's move on to earnings spotlight. And definitely in the spotlight on Tuesday is going to be IBM, which after hours tonight is up about 4.5%. They did beat their estimates, 218 versus 214 on the bottom line. Stock was up around 132 in after hours. Need to get through about 136. On a relative basis, not a big fan. So nice to see the good earnings. I want to see a breakout. I have no interest in IBM until we can at least, at a minimum, get through that June top, 136, 136.5, somewhere in that area. CDNS, this is a stock actually in our model portfolio. I mentioned at the top of the show, our model portfolio up more than 100 percentage points above the S&P 500 in 20 months. CDNS is one of our stocks currently in the model portfolio, and you can see the great performance here. They reported after hours, and we're up about 3.7%. I think it was right around 107.50. So looks like it'll at least get off to a good start tomorrow. We'll see what happens after that. CCK, another company reporting after hours. They did beat 133 versus $1.31. And by the way, CDNS, they beat 66 cents versus 52 cents. That was about 26% increase from year to year. That's a pretty big increase in earnings. And as a result, they probably should command a higher multiple. Back to CCK, they did beat $1.33 versus $1.31. After hours, though, stock was down about 2%. So it, just like IBM, hasn't made that breakout above the June high yet. I like this uptrend. I like a nice channel. It seems to be in a very nice channel, but got to break out. Got to get through that 72, 72.5 area. LLNW, this is a very interesting one because it's smaller, number one. It broke out in June on very heavy volume. So obviously there was the anticipation of very strong earnings. On the pullback, we came back down to about this $6.75, $7 area, price support along with that 20-day moving average. And then today we had a pretty big run heading into the close as the earnings were getting ready to come out. Stock up more than 7% on Monday. So what happened with earnings? Well, they came in at 3 cents. The market was expecting 1 cent. So it was a nice beat on the earnings, but after hours, the stock was down about 10 cents or 1.3%. So I think for now, it's just consolidating. I think it may even go back down and test this recent low here around 670, 680. I don't know if it goes down that far, but without the catalyst of earnings and a breakout, I mean, we'll see. Maybe it will open up in a breakout tomorrow, but it didn't look like it was going to in after hours. If it just opens where it's looking at, where it's at right now, maybe it's 755, then I would expect more sideways consolidation before a possible breakout attempt. STLD, talking about the materials earlier. Here's a company that came through with their earnings, 47 cents versus 41. Stock is up about 1% after hours, which would take it up, roughly about, 25, 26 cents. Still, below the June high. Again, like IBM, like CCK, it's got to get through that recent high. I don't want to assume. There's too many other stocks that have already broken not only the June high, but have broken the highs that we saw, prior to that. Many trading at all-time highs. Steel Dynamics is nowhere near that. So we want to be careful and not assume that this stock is just going to take off, because that's not necessarily what's going to happen. And again, a lot of it will come back to the dollar. And does the dollar hold that trend line? If it does, I think materials on a relative basis roll back over again, and companies like STLD struggle and maybe just sideways consolidate, much like they have for the past couple of months. All right, one other stock, Zion. This is a bank. Banks, got things started in earnings season last week. A lot of mixed reports. Well, Zion missed 34 cents versus 37 cents. The stock is down about 0.5% after hours. It's been in a downtrend. When I look at it on a relative basis, it was starting to strengthen, then kind of fell apart recently. You can see relative to the S&P, it's down near low. Banks have been horrible. This is just a group. Let's let the group start to show some relative strength for a period of time before we commit. I'm not interested in trying to time a bottom. I don't try to catch bottoms. I like to try and ride trends. There's a huge difference between riding trends and trying to catch bottoms. Anyhow, I'm going to pass on Zion. All right, let's go ahead and get ready to wrap up the show. The three you must see. Got a few stocks here for you. The first one, this is, I looked at the S&P 500's leaderboard, the loser leaderboard. So the worst 10 performers in the S&P 500. And I was looking to see if any of them showed any potential. 9 of them did not. I was not a fan of 9 of them. The 10th one, though, Howmet Aerospace, I thought, okay, well, maybe, just maybe, this one's got an opportunity. So why do I like this? Well, we moved up here. We're above the late June high. We're still above the 20, which is above the 50. We came back down, tested gap support and the 20. I think we're still at least, have a chance. And we're starting to show some relative strength versus our peers or its peers. So I think it's still got a shot. We'll have to kind of keep an eye on that one. All right, AMD. Let's move on to some strength, though. AMD, really tough resistance area that it's approaching right now. If this stock can get through 60, I think it could really roll. And the semiconductors broke out. This had been a leader. So let's see if this downtrend, this relative downtrend breaks. If this stock starts to turn back up and gets a breakout above 60, I think you could be looking at a really strong stock for the next quarter. Finally, last one is Fortinet. This is FTNT. It's in the software space. Came back down recently, down close to a very good support area. I think 120 to 125 is super support on Fortinet. We got down a little below 125, made a run back up, testing that 20-day moving average. I don't know if we're going to get through or not, but my guess is we are. I'm looking for it to get back to that 150 area. All right, everybody have a great day, and I'll be back on Wednesday over at Earnings Beats. Take care. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.